Hello, ladies and gentlemen. My name is Greg Michalowski from ForexLive.com. Today's date is November 21st, 2022. It's the start of the new trading week, and this week, as a matter of fact, the Forex Magnets London Summit will take place. So if you're in the London area, be sure to register and head to that event. It's going to take place on starting today until Wednesday. So you can register now and I think go to that event. There's lots of neat stuff there, and our Adam Button will be there as well, so you can go and see Adam personally. Tell him I said hello. Anyway, let's get into the technicals. We'll start off by taking a look at the euro versus US dollar. In the weekend Forex report, I focused on this currency as I did on all the major currency pairs. So you can go to our website or go to YouTube station and look at the weekend Forex report. But taking a look at the price action in trading here today, we're seeing the euro versus US dollar move to the downside. This is a daily chart of the pair, and as I mentioned over the weekend, the market last week tried to get above the 200-day moving average on one and two different attempts here, but failed on Thursday and Friday. The price stayed below that 200-day moving average, keeping a lid against that key target level, and pushed down into Friday's close. In trading here today, we saw a continuation to the downside that took the price below the 38.2%, the broken 38.2% retracement, I should say. That level comes in right here at the 1.02841 level, and is going to be resistance in trading here today. The level also corresponded with swing areas through here. We had swing highs, we moved above it here, moving up to another swing area, and then in trading last week and the week before, we also came down into and found support against that level before moving to the upside. So breaking back below that level is more bearish, and the traders will be using that level as a level of resistance, or this area and this level near the 102.84 level. Let's take a look at the hourly chart, because on the hourly chart, we also moved below a key 38.2% retracement and 200-hour moving average. In this case, this is of the last trend move to the upside. As you can see, the market stalled against the 38.2% retracement level through here, and in trading last week, and it also stalled against what was later to be the 38.2 here. So this level was a key support level, and as you can see, it was joined by the 200-hour moving average in trading here today. And when the market fell below that level, we started to use that level as resistance. So needless to say, the 102.72 level is going to be a close resistance level as well on the top side, and this swing area encompassing all these different swing lows and highs through here, or swing lows, I guess I should say, and then I guess a swing high right here up to the 102.93 level. So 102.73 up to 102.93 is going to be a resistance level on the top side. On the downside, the next target comes in against the 50%. Again, this is just of the move up from the last trend move to the upside. So these are sort of the minimum retracement targets that the price needs to get to and through. So we'll watch that level, and then we'll move the Fibonacci down further to see what target levels are on the downside here. But if the price can't get below the 50%, the 38.2 to 50% retracement, I like of the last trend move, it's really just a little corrective move. I like it that we're below the 200-hour moving average, but we still need to get below the 50% retracement on the downside to increase the bearish bias here for the euro versus US dollar. Let's take a look at the dollar versus yen, and on the daily chart. In the weekend report, I talked a lot about the 100-day moving average, how the price fell below that level and tried to stay below that level through all of last week's trading on little moves to the upside here, sort of a non-trending type of day or week last week. Where we had one shot to the downside that looked toward the 38.2% retracement of the 2022 trading range. So that was a key level, and as you can see, early buyers came in against that 38.2% retracement right here, and pushed the price back to the upside, where the price found the sellers against the 100-day moving average. And trading here today, well, what are we saying? We're saying the break of the 100-day moving average, which is a bullish bias here, bias change here, 141.02. That's going to be our support level now. We also moved above this swing low here. Sort of, you try to find these levels where traders might pay attention to, because it was a quick and fast move to the downside and quick and fast move to the upside as well, so as a matter of fact. So 141.75. Let's take a look at the hourly chart, see if there's any other additional clues that we could see off of that. And what we see really is the 200-hour moving average and the 100-day moving average are both one and the same, and that increases this level's importance right through here. The green line represents the 200-hour moving average. This blue step line represents the overlay of the 100-day moving average on this hourly chart. So really nothing, not a lot of support until you get to that level. So it becomes a stay above the 100-day moving average, stay above the 200-hour moving average is more bullish. On the top side, like the pound versus US dollar, the 38 point or the 50% retracement of the move down, of the last move down. This is the last trend leg to the downside here. It's not the full trend leg to the downside, but the last trend leg to the downside comes in at the 142.157 level, and that level would need to be broken. As you can see, we found early sellers against that level in trading here today, and pushing a little bit to the downside here in early US trading. So we'll be watching that 50% on the top side as the next target to get to and through, and support down here at the 200-hour moving average, 100-day moving average. But buyers are trying to make a play here in the sterling versus US dollar. We'll see if that can follow through in trading here today. Let's take a look at the dollar versus Swiss really quick to see what that is telling us on the hourly chart. I like this chart for our bias and risk defining levels. The 200-hour moving average, first break above the 200-hour moving average since going back to this day right here in early November. The ability to get back above that level is a bullish tilt, but we do have this 200-day moving average. That's this green overlay chart here, and the 50% retracements come basically at the same levels at 0.9627 level. Currently trading at 957.777. So we are, 27 plus another 23, about 50 pips away from that level. We need to that's the key targets on the top side. On the downside, the 200-hour moving average is going to be our risk-defining level and our bias-defining level in the short term. If the market can stay above this level, and maybe 38.2, so let's call this area between the 0.9551 and 0.9563 as our support level. So traders who want to buy the dollar would look toward that area as a support before a rotation back to the upside on it. Any sort of corrective move to the downside here, we know that buyers came in here on the break of the 200-hour moving average. Let's take a look at the dollar versus Canada. We're seeing a further move to the upside. This is the daily chart last week, and I outlined the 100-day moving average as being a support, along with the 38.2% retracement and this swing area, swing levels through here. And then we came down to that swing area, 38.2, 100-day moving average. All those things converge here to force the price back to the upside. We're moving above this swing area on the daily chart between 133.89 and 134.19. On the hourly chart, what is that telling us? And if we look at the hourly chart, we are seeing a break further to the upside here. And in this case, this is the last swing move to the downside here for this currency pair, and we are above the 50% in trading here today, and we did also move above these swing level targets, where in this area here we had a swing high. We kind of found that ceiling there between the 133.97 134.07 on Friday, and then we broke above it, and we stayed above that level in trading here today. So this is our risk-defining level on the downside for buyers looking for more upside momentum between the 134.07 and 133.97. So there you have it. Look at some of the major currency pairs as we head into the new trading week. My name is Michalowski. Good fortune with your trading. Bye-bye now.